If your chart looks like this with a lot of indicators, this is not helping you. This is actually confusing. So let me show you in this video how you can analyze an empty chart without indicators and be more prepared for good, profitable trades. So when we started, we all wanted to use indicators because this seems like the easiest way to trade and the easiest way to find a trading strategy. So for example, with, let's say, moving averages, as I have right here, when you have a cross, we can look, for example, for buys, etc. Or for example, with the MACD, so if you're oversold with the RSI or overbought. But anyway, guys, this is too much information. So let me explain why. Using indicators is good if, for example, you use one or let's say maximum two to help you confirm a bias. But when your chart is messed up with so many indicators, you're actually not even seeing your chart, your own naked chart. So let me show you how, with removing all of those indicators right here, right here, right here, I can still understand what's going on this chart, and you can do too, and then you will learn how to trade without indicators with a way profitable strategy. So first of all, let's delete all indicators and let's go right here. So this right here is actually a trade that is going on right now on my For Traders prop firm account. So as you can see right here, we had an amazing entry and now price is just pushing to the downside. So as you can see right here, this is the exact same trade. So I already took my partials, placed my stop loss to break even to secure this trade. So now it's a risk-free trade and I can just hold it for around the 107 risk-reward ratio. So let's see how you can as well cut this trade basically without any indicators, only with pure price action. So first things first, you will need to find your bias. It's super important to find your bias. So let me just delete this alert as the stop loss will never get hit. So bam. So let's delete everything and let's start from scratch. So first things first, you need to understand your bias. To find your bias, you have multiple options. For me, as I trade a higher time frame strategy and I scale down into lower time frames, I will go on a higher time frame to find my overall bias. In this case, if I dezoom a little bit, you can see that we are overall bullish. We're actually pushing to the upside. So my overall bias is bullish. So technically, I will need to look for some buys. However, as well, at the moment, we are having some downtrend momentum right here. So this, we are now pushing to the downside. This, for now, is only a pullback, right? In this overall bullish momentum. So as we're having this overall bullish momentum exactly right here, this is just the pullback in the overall bullish momentum. But we can still look for some sells. But like you saw previously, I had my sells marked as counter trend. So first things first, if for example I would have looked for some buys, I could have looked, for example, from this POY, let's say, for a buy, and now I'm looking for some sells. Let's do the first buy example first, as it's the most easy one. So if we do the first buy example, I by the way changed the pair, but it's pretty much the same price action. It's just for you to be more easy. So right here as well, we have our overall bullish bias. As you can see, we're pushing to the upside. So what you need to do is basically identify your trading range. So in this case, your trading range, the last break of structure to the upside was actually right here, creating this last trading range. But we still have some unmitigated points of interest / order blocks in the bottom, with a lot right here of liquidity. So basically you can still look for some trades outside of one trading range, so in the previous trading range right here. And like we saw on the previous example, here too we have some bearish momentum, but overall we're bullish, so we are sticking with our bullish bias first. So as you can see right here, after identified your bias, you can identify your valid points of interest / order blocks. In this case, I have a 4-hour point of interest. So I will just wait for my 4-hour POY to get mitigated. So this means that price will tap into it, and then I will go on the 15-minute to look for a confirmation. You see right here, I didn't use any like moving averages. I didn't use any overbought, oversell. I'm just looking at the naked chart, and I'm just looking at the pure price action, and in this case, as we're pushing to the upside, I'm looking for buys. So you know, you don't need to overcomplicate what's going on. And another thing, you can as well, instead of looking for indicators, you can look for some structure. So in this case, the structure is bullish, so we're looking for buys. Here we have some counter trend bearish structure, so you can as well look for some sells, but for counter trend, the example we're gonna see later on. But for now, overall we're bullish, so let's look for some buys. So price tapped into this 4-hour POY like I was explaining, so the only thing you need to do is to go on the 15-minute and to identify your 15-minute change in the structure. So how to trade without indicators, it's all in the structure. If you can master the technicals of market structure, that are the ranges, the breakout structures and the biases, this is how you will be able to remove all indicators basically. So right here, your last breakout structure to the downside was right here. I personally identify my breakout structure from a body closure to another body closure. Some people do it as well with wicks, but for my strategy, this is how I use it. So this is technically your last range. So as you can see, as this is the last breakout structure, this is the high connected to the low, so this is your last range. So now if, for example, we have another breakout structure like it happened right here, we're gonna have a change in the trading range right here. So now, to have our confirmation, we just need to have this high being broken to wait for an intermediate time frame confirmation. Why we're looking for a 15-minute break right here? It's because we want overall to buy, and we want to confirm that this point of interest, it's actually strong enough to reject. So this will just mean if we break structure to the upside, this will signify that the POY is rejecting, so we will be able to enter. As you can see right here, we indeed got our breakout structure, creating this range. Some people as well call this movement a change of character. For me, to simplify everything, I call this everything a breakout structure. So now we have this 15-minute breakout structure right here. So you're just going to identify your new most extreme lower time frame POY. In this case, the lower time frame POY is right here on the 5 minutes, and you're just going to take your entry right here. Stop loss will be below the 15-minute range low right here. Don't forget to add a little bit of pips for stop loss, liquidity sweeps, and for basically spreads, but in this case you have no spreads as you are looking for buys, so we don't have spreads when we are exiting the trade. So just for liquidity sweeps, don't hesitate to add a little bit of pips, so something like this, so you will avoid to get stopped out. For your entry, this will be your entry, add a little bit of pips as well, and your take profit one will be at 103 risk trade ratio. So at 103 risk trade ratio, you will be actually looking for some partials, so close half of your position and place your stop loss to break even, and your take profit final will be at the hourly high exactly right here. So as you can see, this trade is for a 1 to 5.6 risk trade ratio. So let's see how it played out. As you can see, we got mitigated perfectly, and we just had an amazing rejection, and we hit all our take profits. So this was the easy trade without any indicators, just to focus on pure price action. So as you can see, the overall thing you need to do is to understand price action. So if you don't know how to identify a trading range or a breakout structure, don't hesitate to watch my previous video on my SMC strategy that I posted as well on For Traders. The link will be in the description. But basically, if you can just understand where price is moving with the overall biases, you can just look for points where it might reverse and react, and that's it. You don't need anything else. Now let's do the sell example that I was talking about previously. So this is the sell example that is actually running right now. So we know that we took a buy from, for example, this area. Now we can actually look for a sell. However, same thing, guys, the sells for now, like I was explaining, are still counter trend. Why? Because if you dezoom a little bit, your overall bias is bullish. So this means that this movement right here might just be a little pullback, but this movement, it's still a valid pullback. So you can understand, even without the like MACD or MAs or whatever, moving averages or whatever, you are able to understand that here we're pushing to the downside, so we're looking for some sells. Here we're pushing to the upside, so we're looking for some buys. So that's it. So now we can as well, same thing, identify our last trading range right here, creating this high and this low. And after identify that, you can actually again identify your valid points of interest. In this case, your valid points of interest, there is nothing on the 4 hour, so we can scale down into the 1 hour. And into the 1 hour, you have this beautiful point of interest with all of this liquidity sitting up right here. That price tapped into it, so same thing as previously. We're just gonna wait for a 15-minute change of character / break of structure to the downside. In this case, the last break of structure happened right here. So this right here is the low we need to break. So let's see what happens. Bam, we broke through the low almost instantly. So now same thing, we're just gonna identify our most extreme POY. In this case, our most extreme POY is on the 1 minute time frame. As you can see, it's this little POY right here. We're gonna place your entry right here. Your stop loss, same thing, will be above the 15-minute range high. So this is the range high. Stop loss above, adding a little bit of pips. And then you will just target a 1-to-3 risk-reward ratio for a take profit 1. So again, don't be too shy with your stop loss. Don't place it too close like this, because if you do, you might get swept. So leave it room to breathe, you know, leave it room to breathe. So something like this, 1-to-3 risk-reward ratio will be your take profit 1. And let's see where will be your take profit final. So take profit final can be at the hourly low right here. So let's see what will happen right here. So even right now, I can consider that my entry is a bit tight. I can leave it a bit more room to breathe, because I personally don't like entries too tight. If not, you might get swept. So let's see what's going on right here. So price tapped into the entry perfectly right here. And now it's just pushing to the downside, as you can see right here. It reached our 1-to-3 risk-reward ratio take profit 1. So now, like you saw previously on my For Traders prop firm account, right here I placed my stop loss to break even, and now this trade is just running until the overall low right here for an amazing risk to reward ratio. So that's it, guys. Now you know how to analyze a chart without any indicators, really simply by just identifying your structure, identifying your overall bias, and know if you're overall bullish or if you're in a counter trend range. And then you just look for your points of interest and your order blocks. Basically, it's pretty much the same thing. And then you can just wait for an intermediate time frame confirmation, like on the 15-minute, and enter from the extreme POY. So you see, I didn't use any indicators. It was really simple and my chart looked really clean. You don't need all of those messy indicators. Of course, there are some strategy that works pretty well with those indicators, but at the same time, guys, you need to understand that having too much of them, it's never too good. You should actually focus on maybe one and add it to your confluence. But if you want to remove all indicators from your trading and just focus on pure price action, do what we saw today. So if you enjoyed this video, don't hesitate to subscribe to For Traders YouTube channel, see our challenges in the description, and if not, I'm gonna see you soon in another episode of Koshkah'S Academy of Trading.